Good morning, everybody, and this is your S&P 500 day trade setups for today. So yesterday, being a public holiday in the US, nothing really went on. Big up, big down. We're just hanging around the bottom here. But this morning we wake up to the news that Russia has started moving troops into the Ukraine, and that's the gap down this morning. Now, you got to wonder how long this politician's ego is going to last, and I think the rest of the world are going to react very strongly to him. So you just got to wonder what's going to happen. Is it going to be a full-scale war, or is it eventually going to sort itself out? Now, having fought in a politician's war myself, it's not something that we as normal people want, and all we want to do is get on with our lives while you've got politicians with their egos and greed that are basically trying to drive the situation to their own personal gain at the end of the day anyway. But what it's doing to the market is obviously putting fear in. So a lot of people are scared. They're scared of a full-scale war. They're scared of, there's a lot of media noise out there that could be bigger than World War II and all sorts of things going on. So that is a fear in the market at the moment. So a lot of people are withdrawing savings. They're withdrawing their investments, and then you've got your investors like you and I, basically, who are just sitting by quietly watching what's going on. And some of us are actually making a lot of money out of this. And it wouldn't surprise me to see some of these politicians making a lot of money out of this as well, as they know exactly what they're doing and where they're going. So at the moment, for me, we are forming a bit of a wedge, as I've drawn in while we've been talking, and we're sort of at this level here. And if you look, there are two areas to it. That's the first one, and sorry, there are three actually. So I'm going to just take the top of this week, and then what we're going to do is take that this tail from when was that? I think this one was 23rd of January, where we had 42.21 tagged. So that's kind of the view. I do like the way the weekly oscillators are starting to look. It is really starting to look like an area of value. Now, if you just filter out the war noise, you would start looking at the charts a little bit differently and looking to see what level are we aiming for. These are the three that I have drawn in at the moment, and pretty clear. 42.71 is where we are at the moment. We've gapped down onto it. It is also bottom of this trend line here as well. So that is a first area that could see some action. 42.48 is the next area, and then 42.24 is the next area. 4200 will definitely be something that may be tagged as well. But a break and retest of 42.24 is going to be pretty telling at the moment. Futures is down over 1% at the moment, specifically on the US markets. And if you start looking, look at my oscillators on all the time frames, on the 1 hour, on the 3 hour, on the 8 hour, on the daily, not quite there yet, but getting there. And then obviously on the weekly, we are getting there. And on the monthly, we have only just started moving to the downside. So the trend is still up at the end of the day. There's no debate about that. So this little reset is definitely what we need. We just need it in order to get in to better positions. So right now, don't want to be jumping short here. I want to be jumping short from up here. So somewhere in this area of 4,300, there is a gap up there as well. So I'd want to see price come back in this area and then an opportunity to be short. It depends on the noise now. It really does depend on the noise. With Russia making its move, what's the rest of the world going to do? So that is the scenario we have at the moment. I'm cautious, very cautious here, because anything can happen. This could be a situation where everybody starts piling in short because they think this is going to be the end of the world, and we drop. So I'd rather be short from structure, and there's no structure down the bottom here. So for me, this is the first area, 4,300, And then the second area is basically the open of last week, which is going to be 43.17. Well, sorry, not the open of last week, but the open of yesterday. So 43.17, 4300. That's the zone I'm looking at. And as I'm talking, you can see we are still falling. Yeah, there's just no structure there. Definitely, this is holiday traffic here, and that was a great opportunity to get in short up there. But being a holiday, it's not something that I normally do. Everything's lined up. Oscillator's lined up off the 155, and if you look to the left, there was actually quite a bit of structure there as well on the 15-minute. And nice little pin bar, nice little setup there. But I wasn't paying attention to that being a holiday. So yeah, pullback, looking for a retest of this 42.72. But I have a sneaky suspicion we're heading down to 42.24 and 4200 ultimately. Possibly even as far as 4,000 at the moment. So yeah, I think you want to be fading in. In other words, you want to be looking for the pullbacks, and when the pullbacks happen, you want to wait for a decent level, and you want to get in short and take the ride down to the next level, cash out, and then keep, rinse and repeat until the political situation stabilizes. Once it stabilizes, then I think you should be looking for value, because I don't see the Feds letting this thing fall forever. It's not in their best interest to do that. Anyway, that's kind of my view at the moment. Wait for the pullback, look for decent structured pullbacks. So in other words, wait for an area where there is a lot of resistance, and preferably do it on like a 3 hour or something. So if you see a 3 hour fractional, that's pretty much an area you need to focus on. So that's 43.17 is the area you want to pay attention to. 43.17, 4300. Even this gap close would also offer some support. So if you can just get price back up to there, you're looking for another move down, and I would go as far as say 42.50 and 4200 are the ultimate targets. 42.24 is the biggest line in the sand. That's the one we need to pay attention to, because if that gives way, that breaks a lot of structure over a long period of time, and that opens up the path. If I just go down to the weekly, you see, messy. Just delete all of this. Delete all. So as I say, that there, this area here is the area we want to be dropping below. So drop below this low. That also drops below the 60 moving average here. So what does that open up to? It opens up to all the way down to the bottom here. That's the next bit of structure that's on the table, and that's around 39.74,000, which is a reasonably decent area to be looking for some opportunities, I would think. But anyway, that's kind of my view at the moment. That's still long term, so you want to be cautiously shorting this based on any pullback that you see onto structure, and take your structure off the 3 hour. Okay, anyway, that's enough waffle for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.